The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
All right. Good morning to everybody. Thursday morning, we've got Mario Draghi in the news today, doing his bit to push the markets higher with the news about the bond buying program.
It's me, Mario.
Some good action there. Okay, there he is. He just waited. We just heard from him. He's our special guest on the show today. How about that? So yeah, Mario's everywhere today. So some terrific action, best action in a month here on the indexes. And I know that this volatility just drives people crazy in either direction, either to the upside or the downside. If you're making some kind of short bet, or if you're caught unaware by some of this type of very bullish action. We also had, I think, some little better numbers on the jobs front from ADP, but of course we've got the big report coming out from the Labor Department. That'll be tomorrow, so we'll see what happens there. And of course, when he gives his speech tonight at the DNC in Charlotte, the president will already have the results of the jobs number. He won't be announcing anything, but he does get those results ahead of the time they are announced. So I don't know. Who knows whether that'll affect anything that he says tonight or not, and who knows whether campaign speeches really amount to a hill of beans anyway. So there you have it. So we've got some good action today. Taking a look here, I have got a chart for you there of Amazon.com, and that is moving up a little bit today in tandem with the market. We've got an announcement coming out later today about the new Kindle. A lot of speculation, the new Kindle Fire, actually, a lot of speculation about what that's going to be. People are even saying, I'm kind of snickering. People are saying it's going to have a phone. Yeah, that sounds far-fetched to me, but heck, you never know. This is Amazon. They do a good job. And the Kindle is an interesting product. I'm one of those people that has both a Kindle and an iPad. And I do use them both, kind of, just different purposes. But they're both good products, obviously. So that's an interesting thing. So we're seeing Amazon kind of rising in tandem with the market today, really. Just ahead of that announcement, I believe that's going to be, I'm not sure what time, but that's going to be later on today, perhaps after the market closes. Don't forget, market close Pacific time, only 1 p.m., only 2 p.m. here. That's kind of a funny thing. When I'm on the East Coast, it'll be 3:30 in the afternoon, and somebody will be talking about the market, and I'll be like, well, the market's closed. And it's like, oh, no, sorry. I've just been west of the Mississippi for so long. It's an odd thing to me to have trading still going on at 3 or 3:30 p.m. And that's a funny thing. It's also, it seems when I'm on the East Coast, you wait forever for the market to open. It's like, come on already. It's the middle of the day. Why hasn't trading started? What's going on here? Okay, so we've got Amazon there waiting for that announcement to occur a little later on today. What else have we got going on? I wanted to talk about a little bit about some of these subsector that I've focused on quite a bit. These housing-related investments have been doing quite well recently. I talked about Trex and Lumber Liquidators and some of these others the other day that are doing better on some news of some stabilization in the housing market. And now that we have some better news potentially regarding employment, you might expect to see housing improve if that trend does continue. And who knows, if we get some worse than expected jobs numbers from the Labor Department tomorrow, you might potentially see some of the housing stocks get slammed on some of that news as well. And then again, you might hear people start to chatter about more QE, and we'll be in that situation where bad news is good news, sort of this topsy-turvy world that the markets can get into sometimes. But anyway, I was taking a look. You cannot deny the fact that some of these mortgage-related names have been solid performers in the past few months. So actually, before I do that, let's just take a little check. I know we have some good action here on the IWM. Yes, you could call that good action. On the Russell 2000, so there's your Russell 2000 ETF, showing some nice gains on the day. We've got it up about 1.81%, so that is ahead of the Dow, as you would expect. And we've got that also, let's see, ahead of the NASDAQ. NASDAQ up 1.74% on the session, got the IWM up 1.81. So, that's also not unexpected, because you do see when you've got some kind of rally going on, a lot of these smaller caps can tend to outperform the major indices. Of course, you can frequently see the reverse situation occurs, where you have in a down market, you have some of these smaller cap names will fall to a greater degree than the major indices. And that's often true of a lot of these growth names. As many of you know, I come from a growth investing background, and it's not uncommon to see some of these growth names, even in the mid caps. Even among some of the larger cap growth names, you can just see them fall a little bit more than the general market in a market downturn. And of course, being growth names, they will grow in price in a bull market. So there you have it. That's what's going on there with the IWM. Just ticked a little bit higher, 1.82% on the session thus far today. Okay. I want to get into some of these housing names, but first I want to just let you know, later on in the show at the 11:30 segment here in a few minutes, we will have Gabriel Wisdom will be our guest, and he has a very interesting methodology for identifying some stocks with potential, and he calls that the fallen angels. He's been a guest on the show before. He's based out in California, out in San Diego. So I've known Gabe for many years, going back to my IBD years. So we'll be bringing him on the show at about 11:30 Eastern Time. So you want to stick around, get some ideas from him. He always has some very unusual stocks that had not necessarily popped up on my screens. I always like to hear these kind of alternate approaches. If you heard the other day, last week, we had Tom Lamming, the Scout fund manager, was on the show. Talked about Steiner Leisure. 2.6 were a couple of the names that he talked about. LSI was another. And these are names that have, in the past, been on some of my screens, had fallen off for a while, but it's always good to hear where the fund managers and the institutional investors and some of the advisors who pay very close attention to this, where they are looking. So we'll have Gabe on the show in just a few minutes. Let me put up a chart here for a stock that I know I've talked about, and those of you who are subscribers to our Low Price Leaders newsletter may be familiar with this one. This is called Nation Star Mortgage. NSM is the ticker on this one. Now, this company calls itself a non-bank lender, residential lender. Went public back in March at $14 per share, and let's see, it finished that opening day a little bit above that at around $14.20. That's not necessarily material these days anymore. The stock is now trading, let's see, fell a little bit since earlier this morning. It's now at about 27.66, so it's almost doubled since its IPO, and it's a little bit below that 5-day exponential moving average. You can see that it hit some new highs over there in yesterday's session and then pulled back. It's not participating in this market rally today. However, not really uncommon to see some selling after a big run up here. Now, this one, too, as I was kind of pointing out, alluding to a little bit with some of these smaller names. Now, this one has ventured into mid-cap territory, market cap of a little bit shy of $2.5 billion. Good liquidity on this one, about 793,000 shares a day. I think it's gotten quite a bit of attention along with this renewed attention to the housing market. Terrific fundamentals on this. It turned things around in 2011. It had been unprofitable prior to that, and that's not uncommon in newer companies that are putting their revenue back into growth. Okay, so this one showed earnings per share of 23 cents in 2011. That's expected to be, get this, $2.41 this year. You've had some pretty good trends higher in terms of revenue growth on this one. Reported revenue of $200 million in the most recent quarter. That was a triple-digit gain over the year earlier quarter. So very strong fundamental potential on this particular company. So I like what I see here. Not in this stock right now. We had been in this stock in the past. This was a big gainer for us in the Low Price Leaders newsletter at one point. And I should point out, no, I do not consider this a low price name, trading as it is at about 27.66. What we mean by low price leaders around here, when we say that, we're talking about stocks trading between $5 and $12 a share. And when we talk about the other category that we focus on in that newsletter, we talk about small cap stocks. Those are the market cap between about 250, 300 million and 2 billion. We are not going to sell something just because it's hit a certain valuation. We are not stock analysts from some of these investment banks that have these crazy valuation downgrades. And just to let you know, a lot of the fund managers, they are not going to sell when something comes to a certain market cap or necessarily a certain price either. They do use fundamental metrics to guide their trades and their exit points on some of the holdings in their portfolios. But it's not necessarily the case that they're going to be bailing out of something just because some of these analysts at these investment banks give a stock a valuation downgrade. And frequently you see those valuation downgrades are pretty short-lived anyway if the fundamental case and the story remains strong. Okay, so there's our music. We're out of here for a couple minutes while we play some messages here. I'll be right back. We'll look at a couple more names right after this.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Okay, I'm going to digress for just a second here. I put up a chart here. I wasn't able to get this before. It's not a stock that I follow. It's called Lionsgate Entertainment, and if this has been an ongoing saga for quite some time involving Carl Icahn and the board. And to be honest with you, I have not really been following it. I know it's in the news. The CEO of the company, Michael Burns, I met him many, many years ago, back when I was working in Los Angeles and was a business journalist back then. Very nice guy. I remember him as being. I see him on TV quite a bit talking about what's going on here just with the company. And, you know, they have Mad Men, I think, is one of their shows. They've had quite a few successes in the content arena as well. And, again, I've got to tell you, this. I'm going to preface everything I'm saying here by just telling you this is not a company or a stock that I have been following and keeping up. And really following the news on what's going on here. Let me see. It looks like there maybe is some kind of news on this one this morning that China may be thinking about looking at some, maybe looking at investing in some companies, including some of the bigger names. Let's see. Disney, Viacom, Comcast, Time Warner, Lionsgate. So it looks like this is getting a little pop today on some Chinese investment rumors. Now, the reason that I really haven't been following this one too much is because, first of all, entertainment companies, they're notoriously not winners. Now, Disney has been kind of an exception to that. They have their theme parks, which have periodically done well. ESPN has been a leader for them. But companies that are involved kind of purely in the entertainment, movie, and television segment, you have to be very, very careful about what you see on the earnings and revenue performance. I'm looking at this one. You had some year-over-year revenue declines in 2011. That's turned around a bit. We've seen some big improvement this year in terms of Lionsgate revenue growth. Yeah, somebody's pointing out there, Hunger Games, right? Yeah, there you go. So that's it. That explains it right there. Hunger Games is one of them. But you know what? As soon as that franchise doesn't show up on, in terms of being a revenue driver in one quarter, you could easily see this turn around again. Although we're seeing earnings growth expected to come in at 59 cents a share in 2013, doubling to $1.27, more than doubling to $1.27 a share in 2014. So, who knows? This could be a turnaround play. Right now, the technicals do look pretty good with this thing getting a pop. I think it's interesting that it's getting a price pop here today on some of this Chinese news, but you can see I have this for you on a daily chart, and it has been rising in recent sessions, so doing quite well. But, just based on, I do screen for earnings estimates, but this is not yet turned up on my screens on that basis. And if it does continue to be a solid fundamental performer, this one could become part of my scans that just show up. I don't inject opinion into these. I really just run them very quantitatively. This is a mid-cap, market cap of about $2.2 billion, terrific liquidity, about 1.4 million shares moved a day on average. But I got to tell you something, it's not a popular holding among U.S.-based hedge funds and mutual funds. Fewer than 200 of those coming to play here. Of course, no dividend on this one. So I can kind of understand, just given what can be the erratic nature of some of these smaller entertainment companies, I can understand why you would not be necessarily seeing some of the fund managers wanting to take a risk on something like this. Okay. I want to go back to what I consider, anyway, a little bit more substantial names here. We'll just take a quick look at one here. We've got a break coming up here pretty soon, but I'm going to put up a chart for one we looked at the other day, which is Walter Investment Management. This is a REIT that specializes in subprime. They recently acquired one of those reverse mortgage companies, and you've got Fonzie, you've got Robert Wagner, Fred Dalton Thompson, a couple other, James Garner, Mr. Rockford, all these guys out there touting reverse mortgages. Big business when it comes to the aging baby boomers wanting to take out loans on paid-for homes. So that's what you've got there. WAC is a housing-related stock that's higher. Stick around. We've got Gabriel Wisdom coming right up after this break. You don't want to miss him.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back. As always, in this particular time in the show, we have our European close. We've got the international indexes closing significantly higher. Got the U.S. indexes on our Mario Draghi rally today, also trading significantly to the upside. So a lot of interesting action out there, once again, with Europe playing a role. Now, as I mentioned before the break, we have a friend of mine who is joining us right now. Very pleased to be welcoming a return guest here to the Small Cap Roundup, my friend Gabriel Wisdom of American Money Management, and he is also known for his Fallen Angels methodology, which we'll talk about a little bit. Hi, Gabe. Welcome to the show.
Hello, Kate. Nice to be here.
Oh, absolutely. Great to have you here. Now, you probably just heard me. I was talking about some of this crazy upside action we're seeing today. We had Mario Draghi and the ECB talking about their bond buying program this morning. What are you seeing right now just in terms of your market outlook?
Well, I think the Draghi announcement was probably the easiest economic event to predict that ever comes along because in history, whenever we get a debt crisis, a government or governments come along and they paper it over. It's just the way our system works, and it accretes to a higher tax of sorts for every citizen. The value of your money goes down; it gets watered down because they print more of it, and then we go into the next part of the cycle, which is recovery, and then a boom, and an excessive boom, and then a bust. So Europe has been very, very cheap. I've written quite a bit about this over the last year in a newsletter I do called the Fallen Angels Report. And the European Union is said to be the largest combined economy in the world. You won't find many analysts recommending stocks or ETFs of European-based companies, and historically the best time to buy stocks or any investment is when people dislike and avoid them, and that's the whole Fallen Angels concept.
Mm-hmm. Well, I want to get into that in a second, but let me ask you this. Just, if this is the kind of move that has been predicted, and I understand what you're saying, that makes perfect sense, why do investors and traders seem to be kind of so surprised, or are they just looking for an excuse to go long on any given day?
Well, traders think a little differently than investors do. Traders don't care so much about where the long term is going to take us. They're just concerned about what the next short-term move is. Will there be more buyers and sellers, and when does that end? It's sort of like going to the beach to go surfing. They really don't care about how the surf is going to be a year from now or 6 months from now.
Right.
It's all about until the wind kicks up and the wind and the surfing conditions are no longer ideal. We're in a presidential election cycle. It's in full swing, and we've had a massive reflation of the money supply, which is right in time for the re-election efforts of the incumbent party. This is nothing new, and everybody's playing this one according to the old playbook. So it's not unsurprising that we would get such a rally as this, and an announcement from the European Union that they're going to reflate.
Mm-hmm. Yeah, it is interesting because, we go through some of these cycles where some of the European news seems to disappear for a while, and everybody thinks everything is calm, quote unquote, and then it comes back and we have a day like this. So the story continues.
Yeah, that's so true. And, there's been a good deal of chatter about the September effect. Mm-hmm. Is September and then October the worst time in the economic calendar to be in the stock market? Well, nobody knows why, but September does tend to see the sharpest sell-offs when they occur, but they only occur about 50% of the time. It's not something you can really set an investment strategy by. Nobody knows why September is a difficult month. The University of Kansas did a study, and they found that the amount of sunlight or daylight in New York in September drops off at a greater percentage from August than any other time of the year, and it might trigger a seasonal affective disorder or something like that. It makes people risk averse, and they pull their money out. I mean, who knows? But we've got September, and we've got a big rally.
Let's talk a little bit then, Gabe, about the Fallen Angels. I know you've been on here in the past explaining that, but for folks who did not hear the first appearance, tell us what that strategy is.
Fallen Angels is an old Wall Street term that describes stocks or bonds that have fallen but have high intrinsic value. They've fallen in price, but they shouldn't have fallen in price. They've just fallen because of one of typically three forces. Either the market is difficult. Maybe we're in a bear market and everything goes down, or perhaps it's just an industry-specific recession and that industry is out of favor. But nonetheless, those companies now trade for less than it would take to create them, or less than they're worth, and they're healthy enough to survive. And then sometimes you get an opportunity in a recapitalization. That's a real turnaround. I prefer to avoid those unless I've got a high degree of confidence in the turnaround. General Motors would be a good example of a turnaround. They have no debt to speak of now. The government bailed them out. The old shareholders and bondholders were wiped out. Mm-hmm. The stock is well below its initial public offering price, and it's trading around $22. They're getting more financing. Revenue and earnings are growing, and the government still has a big stake in General Motors. In order to break even, they've got to get the stock above $50 a share. I would never sell the government short. I think General Motors is a classic fallen angel.
Now, this strategy is pretty much market cap agnostic, isn't it?
It is market agnostic. We don't really care one way or the other. I may have personal opinions about, who I'd like to see win in November, for example.
Okay.
I might have personal opinions about what I think about housing prices or what have you. But it's balance sheet and financial statement driven.
Okay.
First, we start with a sort of a trolling technique, looking for companies that are trading well below the replacement value, and then we determine whether they can survive in any and every economic condition that might lie ahead. And then if they're flat, if they've flattened out, if they're if all the selling has already occurred, at least we think it has, then they have a high probability, in our view, for some upside.
Give us some names. Do you have any small cap names that are meeting those criteria now, since this is the small cap show?
Well, we have some companies that have become small cap. They didn't used to be.
Right. Of course.
Here's one called GT Advanced Technologies, symbol SOLAR, S-O-L-R, solar company, solar components. Stock's trading around, I think it's around $5.50 a share. Having a good day right now. And our estimate is that intrinsic value should be around $10. That's a great example, I think.
What was the ticker on that one? I'm not able to get that ticker up here on my charts here. What was that ticker?
GT. They've changed the ticker. I'm sorry.
Okay.
It's GT AT. GTAT.
Okay, great.
Yeah, GTAT, and you'll see it around what is it now? About $5.70. So the market capitalization is $678 million. Would that qualify?
$678 million. Yeah, that definitely falls into the small cap arena that I tend to focus on around here. Yeah, very interesting name. How about that?
Analyst estimates, consensus estimates are that a year from now the stock will be trading around $8. And even that, based on our analysis, I mean, we don't know. You're just playing probabilities when you invest. The reason why you diversify and you lay a lot of different bets is you're speculating. There's speculation. In my opinion, there's speculation in everything you do. If you buy a treasury bond, you're speculating that interest rates are going to be right where they are or lower years from now when you go to redeem the bond. That's a speculation. So everything's a speculation. Stocks have the additional risk of potential bankruptcy, where you could lose all your money. So that's why we pay careful attention to the balance sheet financial statement data.
Okay, yeah, and the solar sector clearly is one that has fallen out of favor, but I understand, I'm seeing even some of the bigger companies from that sector are getting a little bounce today as well.
Yeah. I think this one's got a little more leverage. That's my opinion on it. A larger name that trades, that looks like a smaller company, is SAIC. It's a major defense contractor. Their niche, stock's around $12. Their niche is scientific research, engineering, systems integration, technical services. They're big customers of the U.S. Department of Defense and the intelligence community. This thing is, in my opinion, it is way, way cheap. Continues to pay a dividend. And in the second quarter of next year, SAIC is going to split into two companies. I think that'll be the catalyst to send shares higher. In our view, this should be a $20 stock.
Now, is this one of those that could be affected by this fiscal cliff that everybody's worried about? If there's some kind of government contractor, how might that play out?
Well, there's an old Wall Street adage that what everybody knows isn't worth knowing because it's already priced in.
Yeah.
And everybody knows about the fiscal cliff. At least, on Wall Street, we're well aware of what the effects might be if taxes go up and the government withdraws up to $500 billion in government spending, and of course inheritance taxes will go way up January 1, and there'll be some other potentially adverse problems associated with the sunsetting of these Bush tax cuts and so forth. So we think that's priced in. The ISM numbers that came in showed manufacturing orders were down, and that might have something to do with the hesitation large companies have to buy additional equipment and make commitments going into an uncertain 2013. So usually, if it's in the papers, it's in the price, and I think that's true of the solar stocks right now.
Makes a lot of sense. Any others you've got here? We've got a few more minutes left in this segment, Gabe.
Well, I've always got others.
Yeah, good.
It's a matter of waiting it out. That's the key to success, in my view, is being able to buy them, and you never buy at the bottom. You never sell at the top. Bernard Baruch used to like to say that. No one buys at the bottom and sells at the top. It can't be done except by liars. But you try to get as close to the bottom as you can. You try to get close to the top where you can, and then you wait it out. It's the old-time arbitrage game. If the revenue and earnings continue to grow, if return on equity continues to compound, if the book value, the shareholders' equity, the book value of the company is compounding at, say, a 15 or 20% annual rate, it's only a matter of time before the book value, 4 years from now, at those rates, your book value would double. The share price should reflect a higher book value. It should happen. That's usually how it goes. If you get a good fallen angel, you get a lot of them. Diversify your strategy. I lay this out in my book from John Wiley & Sons, Wisdom on Value Investing, How to Profit on Fallen Angels, by me.
Okay. Yeah, and it is a very interesting strategy because as we were kind of pointing out the differences between investors and traders a moment ago, I know sometimes, and a lot of our listeners are traders, they're looking at the shorter term. They don't necessarily want one of these time frames where they sit through something and are patient for months or years with one of these. But I've noticed on a lot of these names there can be short-term opportunities as well.
Oh, yeah, you can make some money on small, mid, and large companies just by waiting for the inevitable, well, I use the term inevitable, I guess, in quotes, but the bounce that's likely to occur. If things get overdone, anybody that reads charts knows that you get oversold and overbought conditions, and it's reflected very vividly in chart patterns. Here's one that I think meets your criteria that I believe has a good chance to succeed. It is a bit of a turnaround, but it's a coal stock. Old King Coal hasn't been this unpopular in years.
No.
And a big coal producer that's been beaten to, it's a fraction of its old value, is Alpha Natural Resources.
ANF,
A&R.
A&R, okay,
yeah,
right. Abercrombie and Fitch I put up there. A&R,
yeah,
yep.
A&R,
Okay.
it's trading under $6 a share.
Yep.
This just a year ago, this was $35, and they do have, they've got a nice business.
Yeah.
So,
good.
I like that.
Hey, Gabe, thank you so much. I'm going to keep this chart up. I'll talk a little bit about it after the break here, but thank you for joining us. It's been always great to have you on the show, as usual, and I appreciate all your insights. This has been fun.
Thank you, Kate.
All right, talk to you soon. Bye-bye.
Bye-bye.
All right, everybody, stick around. I'm going to leave this A&R chart up. He makes some great points here. We'll talk about that after the break. I'll be right back with the last segment of the Small Cap Roundup.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back. Our last segment today in the Small Cap Roundup. As always, it's just gone by in a heartbeat. Want to thank our guest, Gabriel Wisdom. Always has some terrific insights. And yes, wisdom lives up to his name. Now, I left up the chart there for Alpha Natural Resources, A&R. Of course, as Gabe was pointing out, the coal companies are just terribly beaten up, and there's of course been some political risk to these stocks in there. Let's see, market cap right now, this is one of those that is now a small cap, did not used to be. 1.3 billion, huge liquidity, 17 million shares a day. So this is an unusual one. It certainly is one of these fallen angels, not seeing any sign of profitability in the next couple of years. Now, I've got that for you on a daily chart on Tiger TV, and this goes to the point of something that I was talking about a little while ago, which is the fact that some of these analyst downgrades can be fairly short-lived. We had a shop called Dahlman Rose, obviously not one of the big investment banks, one of these boutique companies, that did downgrade some coal names the other day. Peabody, Alpha Natural Resources, Walter Energy. That's not the same as the Walter REIT that I was showing a little bit earlier. Walter Energy. They downgraded all three of those from hold to buy, saying it will take the industry some time to rebalance supply and demand. But now you do see what happened here. You had a downturn on Tuesday, kind of a gap lower here as that downgrade occurred. And then the stock here of ANR has turned higher in the last couple of sessions. So there you have it. That's what's going on there with ANR. A very good example of one of these cases where an analyst downgrade is not really having much of an effect. Let me go to one more stock that I want to talk about here, which is one that I've mentioned on the show quite a bit, and I'm kind of back to that mortgage category that I was talking about earlier in the show. This is Ellie Mae. And this makes mortgage origination software, which it sells to clients in the industry. Let me put this up there for you on a weekly chart. Now, this one is consolidating below its all-time high. This is also a new IPO, went public at $6 a share in April of 2011, and is now trading at about $26.88. So you do see very good price appreciation in this one. See that? Nice move up there in recent months. So good consolidation, holding up above some of these key moving averages. I mean, this one has just shown tremendous technical strength. So it's another one I'm tracking. Small cap, 677 million. Good liquidity, a little bit shy of 600,000 shares a day on average. I want to remind everybody, check out the Low Price Leaders newsletter on the homepage of TFNN.com. You can get in at the introductory rate, and you can test drive it for free for a couple weeks. Check out what we've got going on there. A lot of tremendous ideas. I don't like to overtrade, so that's one thing just to let you know. We like to get maybe a few of these that are winning positions. Risk management is a very key component of the methodology that we employ in that newsletter. So we're going to be getting out of stocks when they are either hitting a stop loss or a trailing stop. So definitely something in there that we'll be watching very carefully. But a lot of good ideas in there, and we've got a position on right now that has done very well. We've had a few of these over the past few months, so you're going to want to check that out. All right, everybody, have a terrific weekend. Thanks so much for joining me today. I want to thank our guest, Gabriel Wisdom, and be sure to check out the Low Price Leaders newsletter on TFNN.com. Be back with you on Tuesday.